right. Good afternoon, everybody. A very, very warm welcome from all of us at Grand Thornton, Bharat. It's a pleasure to really continue this conversation series on overseas listing. Well, first of all, a warm welcome to our distinguished speakers, of course, all our participants and members of the media today. Uh, Today's focus of the discussion is really taking forward what we did on 6th of November, which was like some weeks back. This is around really the insight for corporates. So as you all of you remember that 6th of November, we kind of did the discussion around the why of overseas listing. Why is overseas listing a big opportunity today for Indian corporates? Well, for some of us, most of us, as you're aware, in May 2020, the government came out with the change in the regulations talking about the directionally that Indian private companies could directly list overseas. Of course, that we are waiting for the finer prints of the regulations to come in, whether it is the changes to the Companies Act, the Income Tax Act, the Foreign Exchange Management Act. However, I guess from Grand Thornton, from all of us here, we believe that this is a big opportunity because this is not just a destination, but this is a journey. And as you can imagine, in terms of some of the drivers and the key challenges for Indian companies today, of course, overseas listing presents not only a market of deep investor base, but it also provides an opportunity for improved valuations. Whether it is the unicorns, the startup, or the deep tech sectors, or whether it's the healthcare part of the sector or R&D, obviously the overseas markets are very different and value companies in a quite a different manner compared to some of the Indian markets and Indian investor classes. Apart from the valuations and the investor base, we also have the kind of key messages and the key value of the brand visibility. It's not only just valuations, but it's also about accessing deep pool of customers, reputation, and the brand of the corporates. Some of the challenges we all know clearly revolves around the regulatory constraints. We have seen how the regulations have evolved. We have seen how Indian companies had to kind of move out of India, change their structures to really go for listing overseas. And of course, the governance aspects. The governance in terms of the accounting standards, the boards, and of course, the cost of compliance. So some of these challenges hold certain perspectives as we go for overseas listings. I would like to remind you all that as we kind of go through this journey, I would like to thank all our partners, London Stock Exchange, NASDAQ, JP Morgan, Latham, NASCOM, and of course, all our colleagues at Grand Thornton who've kind of put this together for you. You could refer to the link to the webinar on 6th of November, and I hope you will find that useful. On this backdrop, I would like you to kind of introduce to today's conversation. Today's conversation is really about the who. Which kind of corporates, what kind of Indian corporates are really should be accessing the overseas markets, right? As we talked about the why the opportunity, but here we have a terrific panel of experts, and of course from companies from UK, from the US capital markets, and I'm very, very, very sure that you will get some significant insights from this discussion. Well, I would like to invite now my distinguished speakers and panelists. I would like to invite Vishesh Chandiok, our own Grand Thornton CEO. Of course, our guest, Manjit Rajain from the chairman Tenon Group of Companies. Thank you very much, Manjit, for joining in. Mr. Ghanshyam Dass, who has been senior advisor to the firm and MD of NASDAQ, significant experience on the US capital markets and banking. Anuj is joining from London. Anuj, who leads our Grand Thornton Southeast Asia business group, significant experience in the UK capital markets, joining in. Thank you very much, Anuj, for joining from London. And finally, my colleague, Sid Nigam, Sid, managing partner of Growth Advisory and Investment Banking. And thanks, Sid, for joining in today. So with that, with much ado, I will straight away start with you, Vishesh. Really, as I said, that this is really about what type of corporates really should be looking at this opportunity, right? And it'll be great to hear from you that from the eyes of an Indian corporate, right? How should one look at this opportunity? So over to you, Vishesh.
Well, thank you, Raja. I guess, first of all, very, very happy birthday to you. Only someone like you can put together an event on your birthday. An event on overseas listings just shows your commitment to work and your commitment to this subject, which you lead for Thornton Bharat.
Thank you.
Very, very happy birthday to you. I think, thank you to my fellow panelists for joining this, and of course to the audience today. Answering your question, just my own journey, having seen this subject over a number of years, we had very serious interest from over 200 Indian companies when we first started predicting, the first wave of direct listings overseas. And that was around 2005, 3, 4, 5. That number came down quite rapidly to what eventually was only about 40 companies that since between 2005 and now actually, translated into an overseas listing. A large part of that was because of this regulatory change, which required you to first list in India before you could list overseas, right? I'm really glad to see that sense has finally prevailed and that this restriction is about to be lifted. It just shows you, just think about it. That was announced in the backdrop of the Atmanirbhar Bharat announcement. It just shows you that a listing overseas does not mean you're no longer an Indian company. In fact, the current restrictions are what are encouraging companies to become an overseas company before they list. I'm sure Manjit can pick that up when he comments. So I just feel it's a absolutely brilliant opportunity that is presented now to all companies of all sizes, all sectors in India, in the space of thinking of where they should raise capital from to consider this an opportunity. So think about it from the point of view of first investors, right? That's the most important constituency. From their perspective, as India goes back to perhaps that stable 7% odd growth, who knows, maybe even more. And that will happen from FY22 onwards. It will not happen in 21. We know that there will be a contraction, but 22 onwards, it will happen. All the groundwork for that has been done over the last few years. And I really believe there'll be few places in the world from an investor's perspective that will present that sort of economic opportunity at that scale in the decade or that follows, FY22. Now think of it from the entrepreneur's perspective. I think just imagine the ability for an entrepreneur and for an Indian company to think global from a small and mid-sized scale itself. The ability to use shares of your company to merge, to acquire, to consolidate, in key overseas markets, and to start thinking about that even when you're a small or mid-sized company. The ability to go to your customers with the profile of being a company listed on a market that they understand and trust, not in an overseas remote market. Of course, it's expensive capital. It's not cheap to list overseas, but it depends how you're able to leverage that capital. Are you going to think about it only for within the constraints of your domestic market, or are you going to now post an overseas listing, think of your business on the global scale? And I think all these benefits more than make up for that extra expense of considering an overseas listing. Certainly there are some sectors, technology, energy, particularly clean tech, startups, many of whom are already set up as an overseas, using an overseas structure, healthcare, pharma, biotech. Those would be the four main sectors that I feel will be early drivers of overseas listings, direct overseas listings, as the norms are relaxed in India. And of course, we at Thornton Bharat believe that there'll be more than 100 Indian companies that will go for an overseas listing in the decade to 2030. That number is more than twice what have listed so far, and that we believe is a pessimistic number. That's the minimum number that we see. So I think anyone who wants to raise capital is already global or is thinking global. needs to now bring back the subject of overseas listing in the list of their choices. But it's a 6 month to 2 year journey. It is a 6 month to 2 year journey, and therefore you need to start, in my view, considering and start planning that from now.
Thanks, Vishesh, for that, giving that lovely perspective. You also referred to something I personally like, that word trust, because this is not just about Indian investors, but global investors, and how you really build the trust. And you also talked about 100 Indian companies in the next 10 years. It's pessimistic, and I'm sure that there'll be lots more to come. Uh, Now going to Sid. Sid, of course, you've kind of worked with lots of mid-market companies, large companies on capital raise. And it'll be great to hear from you that, in your role as investment banking and evaluating capital raise, there are multiple options. You can stay private equity. There is Indian capital markets, overseas capital markets. So how would you really go about advising a company? What are some of the factors that one should really look for when considering, should I go for overseas listing or should I not?
Thanks, Raja. I think, I would first start by saying that I think this is an excellent opportunity for Indian companies to access global capital. We already have a very vibrant private equity environment in India, and the largest of funds, Global Capital, they have teams here. They've deployed billions and billions of dollars. They become significant owners of Indian companies. And some sectors, they're also playing the role of what I would call the controlling shareholder or promoter. So that journey in the last, I would say, close to 20 years, the presence is there. There has been, many successes where private equity has managed to get great exits, multiples on the investment that they've made. They've also turned around what I would say the standard of governance in a lot of companies. Now, what would happen for a typical entrepreneurial company, whether it's a mid-market or I would say even at the smaller end of large cap, that when you access private capital, the next logical stage for giving an exit was to go and list your business. Trade sales happen, but they are few and far between. Now, in that scenario, there was severe restrictions because Indian companies typically had only the Indian markets to do that. Now, our markets are large, they are secure, but they are not deep or sophisticated. And I'll elaborate a little bit in terms of choices that companies have. So today, when you want to raise capital, you could go and raise some debt, or you access private equity, or you think about listing on the Indian exchange. Now, listing on an Indian exchange has its own, what I would say challenges in terms of the scale and size that you need to have, because unless you're a certain size, you don't really get a look in by whether it's the book running lead managers, it's investors, it's lawyers, because the market tends to skew towards the larger issues. Now, what overseas markets allow you when you are looking at a listing option is it allows you a plethora of markets which are, I would say focused not on size of issue, on sectors, on kind of investors. Just to give you an example, the alternative investment market, which is part of the London Stock Exchange. If you people have gone and raised money, especially in the energy sector, with zero revenue, because there are investors who understand and are willing to take that risk and reward. Now, that is an option for a natural resources company. Similarly, when you're a tech or a tech-enabled company, the level of sophistication that US investors on a market like NASDAQ have, we are still a few years away from that. So in summary, it is another option. Now, what I would also say is that it's not going to be an easy option. Vishesh alluded to it being a 6 month to a 2 year project to do that. What we also need to keep in mind that the bar on governance, the bar on how well you're organized is much higher when you look at an overseas listing. So if as an Indian corporate, it's a class of capital that you want to access, you need to prepare yourself well to do that, because now you're not just operating in what I would call your backyard, but you are in front of global investors in a global market. So it's a fabulous opportunity. I think it also allows you as a company from a stage of evolution, from the sector you're focused on, to go beyond what was, an NSC or a BSc, which are, in a way all the same. There's no distinction between the two. Yes, the regulators trying to create the small exchanges, allowing, startups to come in. But again, so that was my point around deep. That second is sophistication. I think that is another element that pretty much every public issue in India is very standard. You offer your equity shares, they're one class of shares, and you move on. Moment you go to global capital markets, you can have multiple classes of shares. You have an opportunity to even list holdcos. So and so on and so forth. So I think that sophistication, the products that are available, the options that are available to structure are much more. I think also an opportunity as a company, if you want to do something quicker, which global capital markets do understand, and it's pretty popular, is to actually merge into a SPAC, which already is sitting there ready to really push the button, sitting on capital, so you can cut short your timing to market as well. So Raja, I would say that I'm pretty excited about this potential move. It allows us as advisors, as stakeholders, to bring to Indian companies more options in accessing global capital, which was today was only restricted to either private equity or Indian browsers through FIIs, which operate in a, I would say, a fairly secular, plain vanilla manner.
Sure, Sid. I think thanks for giving the perspective. You obviously said very clearly it's a massive opportunity. The sophistication of the investor class is quite different, and that's what in corporate should leverage. Now going to Ghanshyam Das, GD, most popularly called. So Ghanshyam, GD, if I may call you, it'll be
Please.
great to give us a perspective on the regulatory journey, and I'll give you some perspective. There's already some questions on the chat box that is it necessary for an Indian company to get listed in India to go for an overseas listing? I think you can cover that, but it'll be great to give that perspective on the regulatory landscape. Over to you.
Thanks, Raja. Both Vishesh, Siddharth, and also Raja, you, in terms of setting the background, setting the context, have done a good job. And all I would like to say is, from a regulatory perspective, what we need to communicate is, I thought, I must take you back to my, historical confines and dealing in this market, especially regional markets, including China, when I joined NASDAQ. It was such an exciting, journey at the time, because in post-economic crisis in 1991, in 1993, the government allowed both direct and indirect listings overseas. During my journey with NASDAQ in the region, both Asia Pac and Middle East, India was one of the most prominent and most promising destination as far as NASDAQ was concerned. You'll be surprised, in our initial years, when we were running around, we did close to about, 39 roadshows in the first 5 years, starting from 99. Both domestic roadshows and overseas roadshows. We did a roadshow even for Mr. Bajpai, and some, of course, that was at the time, when we had almost, the government had almost decided to reverse the process, but we still went out and did that. It was a very successful roadshow. And we did roadshows for also US listed companies on NASDAQ. They wanted to see as to how India is and what Indian markets are like, because they wanted to expand overseas. They had tested, Europe, they had seen Ireland, they had seen all the destinations. But in back home, in the Silicon Valley, I have seen that myself during my tenure with Wells Fargo Bank. In those days, I'm talking of 79, 80, 6 out of 10 used to be Indians working in various companies. And they always felt that, India must have a phenomenal, growth story when it comes to high-tech sector, both pharma, biotech, that's what was predominantly, pursued in San Diego at the time. And in Silicon Valley, of course, high-tech sector, high-tech industries. They were very keen to look at if they could expand to India. And it happened, let's face it. At least if we were not able to get more companies to NASDAQ, but at least you see the overseas companies, the US and European companies, they came and set up their huge shops in India. And I'm very proud to make a statement. Even a company like Intel, who was having fabs all over, but they were extremely reluctant if they can set up a fab in India. In one of the meetings, when Mr. Craig Barrett was visiting, and we had a meeting with Mr. Pramod Mahajan in Delhi, he was late Mr. Pramod Mahajan, who was heading IT and telecom sector at the time. He insisted, he said, why can't you look at some other option for India? You can't set up your high-end, R&Ds in China. Why can't you do that in India at least? And it clicked, I promise you. And then, of course, they debated. They were looking at Mumbai, to Bangalore, Hyderabad. To cut the story short, they set up the shop in Bangalore. And likewise, if you look at almost all big operators in the US, they have massive setups in India, in NCR region, in Mumbai, in Bangalore, in Hyderabad. It's the rest is history. We had close to about 389 companies which had, US GAAP reconciliations done. 15 nationalized banks. I can give you a list of the banks, and it'll take the whole time. PSUs, public sector undertakings, are also done, US GAAP reconciliation. In the private sector, of course, the list. With this, more and more FIs who were allowed to invest in the country, they started looking at them because the translated accounts were revealing so much. And they said, yes, this is a phenomenal story that we must pursue India per se. And that resulted in a kind of a negation for us also, because companies started saying, when FIs are investing in India, why do we need to go overseas? When, it's fine, but nobody understood that most of these FIs who were coming, they were primarily hedge funds. Close to about 97% of the investors through FIs and FPI routes are hedge funds only. And if you have to track long-term money and long-term investors, pension funds, which is huge, the pool is huge. It's a extremely diversified pool in the US. You have to go and list it there. And in 2005, unfortunately, the curtains were drawn, and we had to. And honestly, you see, personally, it was heartbreaking for me. I couldn't stand it. That you worked so hard in the market, and you were looking at maybe Indian companies will raise close to tens and tens of billions of dollars from US market. It all ended. At the other end, China took the glory confine. I listed personally myself close to about 58 companies from China. As we speak, currently 3 companies like Baidu, Tencent, which were very small. There is not much, $20-30 million. Citrip, very small companies. They are currently they enjoy a market cap of close to $100+ billion. And they're all part of NASDAQ 100. Now, with this current advent, where the government has allowed, and in 2020 they have amended the Companies Act also, and have authorized Ministry of Finance to formalize regulatory requirements for companies to list overseas, in consultation with, of course, Ministry of Corporate Affairs, Reserve Bank of India, and SEBI. And as expected, I personally feel the areas which are likely to be impacted are primarily FEMA, which is which is in specific in relation to Rule 6A, which permits NRIs and PIOs to invest in Indian equities, both domestic and ADRs, and also debt instruments. Then sections related to FDI caps. ITS sector has no FDI caps. They could be invested 100% by overseas entities. So it's only for the other sectors where we have those FDI caps. I think they will be required to be revisited by the concerned committees and members to decide to what all they can allow. And also in certain countries, we have those restrictions. They are required to take prior approval before they invest the company. Even that is required to be revisited, because if we are expanding the network of investor profile. So it has to be global. It should not be restricted only to,
Sure.
destinations where we have. Of course, we need to look at territories where we have strong anti-money laundering, norms. The other important part is existing, guidelines which are related to primarily pricing guidelines may be made inapplicable.
So we'll
And
come to that, sir, in a moment. I guess we'll definitely want to come that on the more specifics on the guidelines. If I may, come back to you later on that. Is that okay, Mr. Das?
absolutely fine. No issues. No issues.
So I guess completely laid out that the sense on the U.S. capital markets, and I think there was one very basic question on, do you need to list in India? Obviously, the current guidelines is you need to list in India and then kind of access overseas markets. The new regulation, which is proposed to come in, which gives access to private companies to directly list overseas. So that's the change.
Absolutely.
So that's the
a
kind
change
of
which has been formalized, but only the guidelines are in process.
will
In progress, you call it. Yeah.
absolutely. So I'll move to Anuj on the UK capital market side. Anuj, you've kind of obviously seen lots of Indian companies accessing the LSE and the AIMS market. There was obviously one question around AIMS. It'll be great to kind of give your views on AIMS and LSE. If it's an Indian corporate today, is there some sectors, some revenue requirements? How should Indian companies look at these two markets? Over to you, Anuj.
Thank you, Raja. Before I answer the specific questions you raised, maybe it'd be useful just to put a context to Grant Thornton's involvement in promoting the London Stock Exchange, which goes back to 2004, where together with the London Stock Exchange, we were the first advisor to look at and promoting the London exchanges. At that time, AIM, or in Alternative Investment Market, was the only platform available. Since then, there is another platform available, which I'll talk about later. But what was interesting is that we were able to promote the alternative investment market, which was set up originally in 1995 to cater for fast growth companies. And most of the Indian companies we were talking to were very much fitting that category of being fast growth companies. What transpired is that Grant Thornton, and that's Grant Thornton Bharat and Grant Thornton UK, were involved in every single listing on the London Exchange in one capacity or the other from 2004 onwards. And our experience has been extremely encouraging in terms of the Indian companies that we listed. You asked the question in terms of sectors. The sectors that we were primarily involved in, and they still remain today, were media, technology. There are other sectors that are particularly favorable to London markets, and Siddhartha has mentioned a couple of them. So, for example, renewable energy, the mining sector are very favorable to the London market. Our experience has been terrific, and we were involved in one Indian listing every month from 2004 onwards, and we had particularly impressive was the quality of the management team that we saw in terms of Indian companies listing. We're very fortunate to have Manjit Rajain, chairman of Tenon, who will obviously give his views, but he's a prime example of the quality of management that we saw with Indian corporates that were looking to list. Hopefully, Raja, that answers your questions. Please, obviously.
No, absolutely. I think there's some interesting question that came out, and if I may ask Anuj on that. So there's a question from Ashutosh itself, and I'll take that. AIM's success seems focused on raw materials, energy, oil and gas, etc. But it's also gives a view on low transparency. And actually, it's a comment by Ashutosh that North American style independent investors may be easier to sell an Indian growth story too. So any quick comments, Anuj, on that? Is that the view on AIMS?
Well, in terms of transparency, is that the question? Or?
Yes.
Yeah. No, I mean, the governance standards required on AIM are very high. It's very much a principles-based governance standard rather than a rules-based governance standard. But in terms of governance requirements, in terms of independent directors and various aspects in terms of company approvals, it is very much a very high standard, to the same standard as you would find in the US exchanges or in the UK main market exchange. I think it is a perception issue, particularly amongst the Indian business community, that it is a easy market to list. It's certainly not an easy market to list, and there are very high standards of governance. And I'm sure Manjit, when he gives you his view on things, will give you his thoughts on the governance standards that he and his company were required to follow.
Well, thanks.
If I can just add there, please,
please.
if it's okay. But I think basically, there were, Anuj said we were involved in every Indian listing on AIM. We were not involved in listing the real estate infra companies that listed on AIM, and very consciously we chose to stay out of that.
Surely.
I think these were companies that either did not have the approval at that time, and should have never were purely domestic, should have never, gone to that exchange. I think, for a fast-growing company that, has an international ambition, AIM was relevant, and I, understand from Anuj is still very relevant, but it needs to be international in the very short term. So Ashutosh, hopefully that gives you some context of whatever it certainly isn't backroom deals. You talk about cozy clubs, backroom deals, regular scandals about conflict of interest. And Raja very gentlemanly in his style avoided quoting you on that, but I will bring that front and center. There is nothing of the sort. AIM is, yes, you pretty much go to a few investors who effectively underwrite your issue, right? Instead of the retail proportion at the beginning is quite small. Retail comes in after the listing, actually, unlike a traditional Indian listing. So it could be 5, 10, 15 institutional investors who are signing up to give you that capital initially. But
thank you.
I'm sure Manjit will touch on some of that.
Can I just add to what Vishesh? Thank you for the reminder about the real estate, which, as you know, we avoided. I think the other thing is that we came across, there were quite a few listings which actually never got to the market, and that's one of the big advantages of the AIM listing, is everything is done in private. So all the diligence happens in private. So there are a number of, and I obviously won't name the companies, but I can name tens of companies that we took to a stage where diligence didn't stack up, either in terms of corporate governance or in terms of something in the past or in terms of the particular issues with the management team. So I think this perception needs to be changed, because as people will know, the decision as to who vets the quality of the teams is down to the nominated advisor, and there's a big responsibility on the nominated advisor to make sure that the right sort of company with the right standards of corporate governance and will be able to remain on the market.
No, absolutely. I think thanks, Anuj, to kind of round it up. It's very clearly governance key remains pretty key. And of course, the perception, in my view, will change. So AIM is definitely an option. So without much ado, I will come straight to Manjit. Manjit, you've kind of been the chairman of Tenon Group of Companies. You've kind of done that. You've gone through that journey of overseas listing, and it'll be great to hear your own story, and I think real perspectives for all of us and obviously all the audience. Over to you, Manjit.
Thanks, Raja, and happy birthday to you.
Thank you.
Thank you very much, Grant Thornton, especially Anuj and Vishesh, for inviting me. I do owe a great gratitude to Grant Thornton India and UK put together, because frankly, I'm an ex-army officer. I don't understand exchanges. At least I didn't once upon a time.
Sure.
I can't say I really do it now. I still depend on very good advisors, but it was a learning experience, and I'd never heard of stock listing, AIM. These were alien subjects to my limited knowledge. I started with a security company, and by the time I completed 1 decade with my business, I realized that I had potential to grow. I had the opportunity to grow. The market was there. But one thing which was the most important, the money wasn't there. So either you then decide to become another a large mom and pop shop where you just keep reinvesting your earnings and retain all the risk, or then you have to look outside. Now, when you start looking outside with your limited knowledge, you start looking at what your advisors tell you. So you go to private equity funds. At that time, just to share with you, my company's turnover was somewhere around the vicinity of just about 60 crores annually, which is nothing much to write home about. To my knowledge, to my limited way of thinking, it was huge. But from a market perspective, from an investor perspective, it was genuinely very small. And I now understand it, why an investor would not look at a company that size. The private equity players, some of them who were interested, wanted an arm and a leg, and if possible, the other arm also. Sadly, that didn't really gel very well with me because this was my life's work and I wanted to be very careful about what I did. Uh, so that is the time somebody mentioned AIM to me, and with limited knowledge, with a little bit of research on what AIM is, I landed up in London. I did my research. I went and met many nomads, many brokers, many nomad. Incidentally, is a short form for nominated advisors, like Anuj just pointed out. Uh, we went around meeting lawyers and everything, and it just wasn't gelling till I thankfully met Anuj, who made the things very clear to me, not because he was looking for business at that time. I think for him also, we were very small, but he was kind enough to really spend time with me, explain to me what it was all about, introduce me to the right lawyers, right advisors, right brokers. The good thing is most firms in UK would be nomads as well as brokers together. That is something I realized very early on, that you must have your broker and your nomad separate so that there is no conflict of interest, which is where GT really ticked the box. So we had them as our nominated advisors. Uh, and then in 2008, we listed, we did a very successful listing, although it was probably the worst of the time, May of 2008, when the global markets were in a downward spiral. And I think I was probably one of the last successful listings for a long time after that. But it worked. Before we went to AIM, we looked around everywhere. We looked at all the junior exchanges. And incidentally, we also looked at India. With India, we had two problems. One, the gestation period, or the period you needed to prepare to reach the listing, was pretty long. And the second big problem was we were not the right size. I don't think we would have fitted any kind of format for the Indian stock exchange. More importantly, the business that I was running, which was security services, and the business that I wanted to set up from the proceeds of the listing, which is facility management, were completely unknown on the Indian stock market. Nobody understood what they really did. So it would have been a really uphill task to explain to an investor what business I do. Whereas an exchange, in a mature exchange like UK, investors know what is facility management, what is security, and it was relatively easy for us to go and explain that to them. That is why we chose, and we of course we looked at Singapore, there who were just starting a junior exchange. We looked at the Hong Kong junior exchange, but for some reason we always liked UK. One, because the language was an advantage. UK with culturally also it seems to be a bit
Sure.
different. Now, for a company like mine to go there, you have zero experience. And the first time I heard the word road show was in UK, and I didn't know what road show meant. I actually like a circus. Actually, it wasn't a circus. It was in a way a circus. So you were taken around. We met, I think, nearly 65 potential investors across 5 countries in a span of like 6 or 7 days. It was madness. By the end of it, you don't know whether you're coming or going. But I must say it was a relatively painless process. A little expensive, but relatively painless. The other problem was that at that point in time, Indian companies were not permitted to list overseas. So you had to now think of ways to go around that. And there were a number of companies who had already done it. You had examples galore. You could go to Mauritius, Cyprus, Isle of Man, BVI, whatever. There again, I think we were very well advised by Grant Thornton, and they brought us to Singapore, which is a very, very clean jurisdiction. Um, so we brought a holdco to Singapore, and that holdco subsequently listed at the London Stock Exchange. That listing through this holdco kind of a mechanism going through another jurisdiction brings its own set of challenges. We had to go through 3 levels of audits: India, Singapore, UK. We had to go through, I remember one investor telling me once, what a convoluted thing it was, that we traded in pounds, we reported in US dollars, and we did business in Singapore dollars and Indian rupees.
Fabulous.
I
Yeah.
I could have come up with a new currency just for me. So there were challenges. You were seriously impacted by currency fluctuations. So in India, you grew by 35%, but really speaking, when you reported, you were at 17%. Although for UK, 17% was also really great when the local companies grew at single digits. But I knew I was growing at 29 to 30%, and you get impacted by currency fluctuations. And that is something probably which will impact companies in the future also. The initial process of listing by itself was a novelty for us. The level of due diligence, and Anuj and Vishesh just pointed that out. I think it's genuinely a misconception. The perception is absolutely wrong that there is, these cozy clubs and, limited diligence, limited transparency. There is no such thing. You have a proper due diligence. In fact, Anuj would remember, I only wanted to murder my nomad because she was so tough with me. Sadly, murder is not permitted in UK. So she got saved. You have to have a proper board. It's the first time I realized what really a board meant. You had to have independent directors, and they had to be okayed by your nomad. If she said or he said no, you couldn't get the particular board member. You had to have good corporate governance practice in place. You must have the right reporting structures. You have to do a 6 monthly reporting. That was probably the only relaxation, that every other stock exchange you do a quarterly reporting. In London you do a half yearly. But for a company like ours, which has zero experience, no maturity, no sophistication, this by itself was a massive challenge. But fortunately, we were very well advised. We had good people working for us. So we went through that whole process. So there were due diligences, there was proper reporting standard, there were compliances, a huge amount of work to do. Everything that you did, if your revenue or fell by a certain percentage or rose by a certain percentage, you're supposed to put out an advisory. You were supposed to tell people what you were doing regularly. Every 6 months, you went and did a roadshow to meet your investors, to update them on what you were doing. So overall, I think it was a fantastic process because it prepares you for the future. We prepared ourselves for the future because our intention always was to go to a main board, whether it's UK or India or Singapore. I don't know, but now, of course, it will be India. But it
And I understand, Manjit, you've recently got delisted. Is that something that you've done as well?
Yes. So Raja, we delisted, and that was also part of our strategy, that at a point in time when we reach a certain size. So when we entered the stock exchange, we were 60 crores. Today, we are 1700 plus crores. So that was the idea. We used these shares that we had to acquire companies. We acquired 2 companies in UK. We acquired a company in India, acquired a company in Singapore. We used our shares. It was a great advantage for a small company like mine. And most importantly, we were serving multinational companies: Intel, Yahoo, Dell, Google, Accenture, Convergys, some phenomenal clients. And all these clients, once you are listed, look at you with a new respect because they know you have good corporate governance practices in place. They know you are a listed entity, so you have a certain level of prestige, and that gives you advantage in running that business. Now, we decided we are going to delist, keep the company private for a year and a half, 2 years, maybe bring in private equity, and subsequently relist at a stock exchange, which gives us the right value, which now, of course, seems to be like India is the right market. But I think what the government has done by changing these rules, I think it's a milestone achievement. I think it's brilliant. It will really, really help companies like mine long term, not having to waste money on audits in various countries, having to waste money on investment on holdcos. We will be able to list directly overseas. Obviously, I'm sure the government, when it comes out with its guidelines, will put into place adequate systems so there's no red tape or bureaucracy, and you have ease of
Sure.
doing business as we are doing now. So that's my 2 bits.
No, brilliant. I think thanks a lot for that. I think it was really taking the journey and sharing the journey. I'm sure it'll be great, valuable experience from everybody listening in here. I guess I'll go to GD, Ghanshyam
Okay.
Das. There was obviously some questions and views is how do you select exchanges, right? Is there a particular revenue threshold? Is there a particular sector? How do you go between a US and the UK? And obviously you kind of seen that experience, seen it through all, but is there some perspectives that you can give around that?
Okay. Now, Raja, honestly, every market should be industry sector agnostic. Our market is nothing but a trading platform, and you can trade anything on that. And so is NASDAQ, if we talk about NASDAQ. And NASDAQ is definitely a home to category defining companies from across industry sectors. And when you look at the industry sector, you have financials, you have healthcare, you have conglomerates, you have consumer groups, you have services, utilities, basic materials like metals and all, and industrial markets, tech companies, of course, NASDAQ is known for, but still technology accounts for only about 29% of the total stack that they have. They have, nobody will think of that they have a company like, Volvo, NEC, Mitsui, Tenon, of course, is there, was gone, Naspers of the world, and, Walmart, they're all listed on NASDAQ. Staples listed on NASDAQ. There are lots of banks listed on NASDAQ and world-class banks listed on NASDAQ. So when it comes to sector selection, I think all exchanges are good. The only thing which is required to be seen is on which market you'll get, the best liquidity support. For liquidity support means, like NYC has 4 specialist firms, and for each company they assign one. On NASDAQ, we have multiple market makers. So what kind of attention you'll get from that market maker? While on a resident market maker, while on NASDAQ, we have on an average about 14 market makers. Whether the company is in the, Reg listed, or it's in the national capital market, which is primarily a small cap, or NASDAQ global market, which is mid-sized companies segment, or NASDAQ global select, which is large-sized companies.
Sure.
These all 4 segments are traded on the same platform. There is no separate exchange for these.
Sure.
So for instance, under Reg A, you could list and raise even $5 million. So I personally feel that, in terms of requirements, whether it's top line revenues or in terms of profitability, there is no, if all we do is, we have these several segments on NASDAQ to ensure the market plays the primary role of allowing and assisting companies to raise capital.
No, absolutely. And I think very quick insight from you is on the cost of capital, right? It's typically perceived that cost of capital raise in the US is quite expensive. So just broad guidelines around that. What kind of cost of capital one should consider?
Average cost, if you look at it, used to be extremely expensive when we started, say, in 2000. And nobody can. And so if at all you end up paying 2.5% more in terms of your listing costs, and of course, little more extra rigor in terms of reporting and compliances, which is, to my mind, almost the same world over now. They have all converged. You can't say that America is more regressive and India is less regressive, or UK is not at all regressive. No, all markets are very, very, very much confined and focused on regulatory compliance and reporting.
Raja,
so there is no concessions on that.
If I can come in, GD sir, Raja's question on what's the cost of listing overseas. Maybe Anuj can also add to that question. But I think basically, in my experience, the cost.
I mentioned 8 to 10%. I mentioned at the beginning 8 to 10%.
Yeah, I just want to give a little bit of color on that. That 8 to 10% is absolutely the right
for
range.
A small cap. For a small cap, if you raise above $100 million, it'll be not more than 5.5 to 7.5%.
Yeah, exactly. So I just wanted to add that basically it would depend on the size of capital you raise. If the capital raise comes down to 25 million pounds, $25 million, $50 million, it'll be towards 10 to 15% would be the cost.
No, that's very high. That's very high.
Time is the cost, at least on in the London markets. However, at the same time, if you raise 50 million, 100 million, 200 million, it reduces because some of the fees are fixed irrespective of size.
Absolutely. Absolutely. Anuj, quick comments from your side. UK market, 5%, 10%. What's the broadly the range one could consider?
Before I answer that question, can I echo GD's comments on
Please.
on the platforms and the international
Please.
platforms? They really are sector agnostic, size agnostic, and it really is down to the individual corporate and what the corporate is looking for in terms of that listing, in terms of which jurisdiction it looks at list. Regulatory wise, as well as GD has mentioned, we're all the same in terms of the standards that we have. Specifically in terms of the costs of listing, again, it varies, as Vishesh has mentioned, because there are certain fixed costs you have, and there is broker's commission. So typically the broker's commission at the moment, both in terms of main market, standard listing, and AIM, is about 4 to 5%. And then to that, you would add about $1 million, $1.25 million of fixed costs. If you do list on the alternative investment market, the big advantage that AIM has is that that fixed cost is not payable the second time round if you do secondary fundraisings. And of course, the ease of fundraising is much easier. Whereas on a standard listing, you would have to pay those costs again in terms of fixed costs. Yeah. Hopefully that answers your question.
Absolutely. Absolutely. I was just kind of, yes.
Raja, if I may, I think it's also important to say that if you were accessing capital markets in India going in for an IPO, the cost would be anywhere from 5 to 6%. So I think, it's the differential amount. It's not that large. And I'd like to just, also repeat what GD talked about, that market making, and just define that for the audience. In overseas markets, especially the sophisticated markets, the underwriters, which are equivalent of our BRLMs, there is a hard underwriting. So if they are not able to sell the issue, they have to subscribe to it. Secondly, as part of their package, they would typically ask for a float that they trade, which they actually do market making by trading in the shares. In India, the market making is soft. It is done through research and advice as opposed to actual trading. So, again, the sophistication in the market and the checks and balances to ensure that there is no insider trading or, nobody's operating your stock, because these markets are very deep and they're very well regulated, and hence hard underwriting and market making in terms of actually trading in the stock of the share of the company that they've taken to listing. It also reiterates the faith that these underwriters or these banks have in the company once they've accepted the mandate. So again, I would look at cost as a very small differential. I would look at more as access to a sophisticated market, a set of global investors who have deep pockets, who have far more intelligence in terms of structures and classes of capital, various funds, research analysts. I think that's really the excitement. The cost differential of 2.5% is more than made up if you do it right.
No, absolutely. Thanks for coming.
Also, by the way, let me supplement what Sid just mentioned. Honestly, the market making concept was originated in India. It was on BSE, Bombay Stock Exchange. Badla system, which we had, that was nothing but market making. But unfortunately, that was not regulated. You'll be surprised. Gordon McLean, the founder of NASDAQ, visited India. And it used to be auction market up until then. And my CEO in America, NSBC, he told me, he said, can I take him to BSE? He would like to spend some time there. It was early 85. You'll be surprised. I took him around. I came from US and took him to the floor. He spent half a day. And in 1991, post Harshad Mehta crisis, we abolished Badla system. We banned it. We killed it. Otherwise, the markets in India would have been a lot more deeper if we had kept a very managed kind of operational framework.
And I guess just to round up what Sid said, is just cost is one aspect, the value is another aspect. So the cost versus the value, classical stuff. So I guess before we kind of round it up this, I think if you could just take a step back and just look at, again, from an India corporate's lens perspective, how do you prepare? How do you strategize, prepare, and plan this opportunity? Because as we kind of move to really corporates thinking about this. So Manjit, coming to you, is there, looking back, is there anything that you would do differently in terms of overseas listing? Obviously, if I may say, working with GT always will continue. Absolutely, I hope that's not an option. But is there something different that you would do if you were to do listing overseas?
So Raja, I've actually many times I've actually sat down. I've had this discussion a couple of times with some friends. I've had this discussion with Anuj also, by the way. Uh, and I don't think a company of my size at that point in time had any other options. We had very limited option. You can't list
Sure.
in India. You can't list overseas unless you had a structure, because they would the law didn't permit it. You couldn't go to a private equity fund. Most exchanges in the world won't accept you because they're too small. So there was not much you could do. However, the only thing that you can do differently is plan it in a structured way to say this is step one, step two. So like we did those steps, but we did it a little slower.
Sure.
Uh, More importantly, maybe we're just very cautious, so we just did it very slowly. Otherwise, really speaking, 5 6 years on a junior exchange, go to the main board, decide which exchange you want, depending on the GDG said, liquidity on that stock exchange, and use it. But really speaking, no, I won't do it differently. I think we were very well advised and we did the right thing.
Thank you for that. I guess coming to Anuj. Anuj, from your perspective, advice for Indian corporates, owners, especially, that this is not a destination, right? It's a journey. It's quite a
Absolutely.
milestone for any company. So what are the tips? What are guidances for them from your
Absolutely.
perspective?
Raja, before I answer that question, I would like to thank Manjit for those very kind words he has mentioned. And certainly we look forward to continuing our long relationship that we have with Manjit and his family and Tenon. I think obvious things that first of all, I think you need to know that you're listing for the right reason, right? Why are you listing, and make sure that strategically that fits in with your own business objectives, your own business plan, whether it's from a brand perspective or whether it's from an access to international investors who understand your business. So I think that's number one, is key, that you do have a rationale for listing, and that needs to be fitted into your business strategy, as it was in Manjit's case. I think number two is don't underestimate the amount of time and commitment that is required for you and your management team in going through the listing process. I think that is absolutely critical. I think number three is that from a finance perspective, you need to make sure that you have robust systems in place. Your accounting systems can cope with IFRS, which will be the universal reporting currency. And I think, lastly, be prepared that there is a lot of hard work, but it is very enjoyable. It is great to be listed. And I'm sure Manjit can recall when he stood at the London Stock Exchange and pressed the bell and rang the bell for the opening of his stock. So there is great fun in going through a listing. It's a great hard work, but it's great fun as well.
Thank you, Anuj. It's of course a lot of hard work, but great fun as well. There is a reward waiting there. GD, over to you. I guess U.S. capital markets, very very litigated market, right? There are
You
lots of.
see, yeah, of course,
How should one?
every market is demanding. You see, when you're buying a property, it's location, location, location. And the US capital markets, they believe in two things. One is liquidity. That is there in any case if you're in the right market. Second aspect is disclosure. From all angles, whatever Anuji just described, which is fully covered. It's relevant whether you're listing in India, whether it's relevant for a company that is looking at listing in Singapore or Hong Kong or in London or New York. But your mindset should be very clear. You have to think and act like a global company from the word go. If you are able to do that, I personally feel in this, interconnected world where everything is flowing free, and you want to grow, and if you are a high growth company, you don't have to look back. You will never be required to look back.
A fabulous statement. I
I
think,
think Ajay is right, because we would have not been a global company but for this listing. And
right.
It's only for you to envision, yes. That's why I said, if we are able to think and act like global company. I've seen most of the Indian mega high-tech companies when they were primarily struggling, when the founders were maybe 4, 5, 6, 8, or operating with 10, 15, 20 people, and where they have achieved. Because from the beginning, I saw most of them, they always had that very perspective very clear. So I think it's important. If we are looking at overseas market, we have to think and act like global companies.
Well, absolutely. Think and act like global companies. And I remember Mr. Murthy's statement, Narayan Murthy of Infosys statement, when in doubt, disclose. When in doubt, disclose. And
Absolutely.
as you said, that disclosure is very, very, very critical part of this. Sid, any quick comments from your side, from a preparation perspective?
I think, I would say there is a preparation to get listed, which I think all the fellow analysts talked about: high level of governance, good systems, strong financial reporting culture, boards, management, etc. But I think I would also say that, a listing is a change in the life cycle of a company. And in my old merchant banking days, we used to say that it is QSQT, quarter se quarter tak. So you have to get used to being in the public eye. It is only a beginning of a journey. Getting through on your opening day, ringing the bell, and I'm sure Manjit can relate to that, is only the start. You have to be on your toes. GD talked about disclosure. Capital markets are very forgiving as long as you let them know of the bad news early enough, but they're
Sure.
absolutely unforgiving if they are not aware of what is going on and they find out otherwise. So that culture needs to be carried through the rest of the life cycle of the company. I think it's an important piece that a lot of times people drop the ball in functions such as investors relations is not set up.
Properly.
CFOs need to double up, or the promoter. So I think there are nuances, and as I said, I can go on for hours, Raja, around that. But I would say that it is only a beginning, and I think you need to stay in shape, because this is a continuous run. It's a marathon. It's not a sprint. Just to
Sure.
finish it.
Absolutely. I think great insights and great stories. Well, now I'll obviously come to Vishesh. Vishesh, obviously we've heard it's a journey. At the beginning, you talked about 100 companies in the next 10 years. If I were to now position India, now Bharat, in the next decade, right, with all the changes that we are seeing, this indeed is a big opportunity, right? And it'll be great to get your maybe top 2 or 3 advice for business owners. How should now they kind of take this journey forward?
So Raja, it'd be great to take some of the audience questions also. The audience has some terrific questions. Just in my view, just 2 or 3 things. First of all, size is not a barrier. What size you're today. It's about what size are you going to be tomorrow. I think GD sir also touched on that. It's the future growth ahead of you. Manjit touched on 60 crores was his size when he went for a listing. And you can be even smaller. Do you have the aspiration of being that 1700 crores that Manjit is today? That's what companies have to focus on. And how quickly can you do that if you had access to capital, if you had access to that currency? So that's the first thing I'd say. Second thing I'd say, even in India, we have seen a step change in approach and attitude of businesses towards compliance. It's no longer only compliance in legal form. It is expected of companies to be compliant in substance. And I think the Indian companies are now used to tougher compliance than in most other places, because the number of regulators, we can't go into that here. So I think companies are now they don't. I think the only thing I would say going forward is your own aspirations. If your aspirations are global, that you want to be part of the global supply chain, you want to have global customers, you want to grow your business globally, even from a small and mid-size of your company, an overseas listing ought to be on your agenda.
Thanks a lot, Vishesh. I guess it's got to be on the agenda for sure. There are a couple of questions which I have not taken. If I may just quickly touch upon that. Maybe a quick response from you, Sid. There's a question that is it necessary for an Indian company to first get listed in India to go for overseas? We've covered the regulatory aspect, but the question is, from a strategy perspective, should one list in India, then go overseas, or really go direct?
So Raja, I think the dual listing is, I would say, for more sophisticated companies who have a track record. I think this is really an opportunity for a first time, initial public offering for a private company to really, as Vishesh said, if you have global aspirations, you have, well-defined plans, and you want access to sophisticated market with global investors who understand your business, your industry better, is to go straight for a, so I would not advise an interim step as a globe or an overseas listing. It would be the first step to be a public interest entity, and I think that interim step is not required.
So it's not required. You could
And
directly
also
access.
remember,
Yeah.
if you take that interim step, then you create a benchmark for yourself, and it's barred. Then it takes very hard for you to, cross the hump to get there.
Yeah.
What you want to achieve overseas.
Absolutely. So I guess we are pretty much on time. We all overshot by I guess 10-15 minutes, but I guess we can go on. I guess what I just want to say that we will continue this conversation series. If there are questions, comments, you got to reach out to us. We'll be most glad to stay connected. As I said in the beginning, we've kind of partnered with various exchanges, law firms, and investment banking firms on this. From Grant Thornton perspective, we believe this is a golden opportunity. And when I step back, and I guess Vishesh talked about it at the opening, that the next decade is clearly for India, and it needs preparation, it needs planning. And I would end with just saying that it's end of the day will boil down to transparency, because that's what is transparency and ethics and disclosure will really get you there at the global stage. And I guess India will have the opportunity for sure. Any final closing comments from anybody before we sign off? Vishesh, Sid, Anuj, Ghanshyam Das.
Thank you for joining us.
Thank you.
This evening.
You see, I would like to simply comment again that the regulatory framework on a global basis is converging. So I personally feel, if you say that India is not is less regulated and US is more stringent, is not fair. I think all the markets have converged on the basis. It's only question of where you will get a better response to your growth story. Do you have that level of depth in the market? Do you have that level of understanding with the investor profile and the constants who are driving your growth story or investing into a company? And answer is, that we will get only in the US or in UK for that matter. And honestly, I would have not mentioned about US if we were discussing this aspect in 85, 89. That was the time when UK was number one. 78% of the global trade was sterling denominated.
Absolutely. So I guess with that, unless anybody else wants to comment.
I think it's about evaluating all your capital raising opportunities. I think private equity capital, debt capital are still very good opportunities. Listing in India is appropriate for some companies, and so is overseas listing. I think all the options are open. There's no one size fits all. The good thing is now all the options are once again open and are going to be easier than before. People like Manjit had to go through a lot of loops before doing an overseas listing. I think that will eventually propel India forward. It will propel shaping a more vibrant Bharat, and that's what we'd like to be behind as a firm, as you know, Raja.
Absolutely. Great. Thank you very much for all my speakers and of course the audience for listening patiently. Stay tuned. We will be at this, and have a great evening and look forward to stay connected. Thank you very much.